Welcome, everyone. Today, we're doing a deep dive into the multifamily market right here in Coeur d'Alene.
That's Coeur d'Alene. Yep,
Exactly. And we're focusing specifically on the first quarter of 2025.
that's right. We're working from a pretty detailed multifamily market report. This one's dated April 2nd, 2025, so it gives us a really fresh snapshot of Q1.
Our mission today is pretty straightforward. Pull out the key insights, the main trends from this report, and give you a clear picture of what was happening on the ground then.
It's definitely a snapshot, like you said. Things move fast, but Q1 looks like a pretty interesting period for Coeur d'Alene.
Okay, so let's start with the big picture. What were the overall market conditions leading into and during Q1?
Well, the report suggests that this heavy supply pressure that really started back in 2019, it was finally starting to ease up a bit by early 2025.
Easing pressure, okay. So less new stuff constantly hitting the market.
Kinda, yeah. The wave was cresting, let's say. And interestingly, demand was holding up pretty
Oh,
well.
yeah. What do the numbers say there?
The trailing 12-month demand, so absorption, was sitting around 610 units.
610. And how does that compare historically?
It's actually quite a bit higher than the 10-year average, which is about 470 units. So, despite all the building, people were still moving into these apartments. Demand was strong.
That's a key point. Strong demand. But what about the supply side? You mentioned the pressure easing.
Right. And this is where it gets really dramatic, groundbreaking. So new projects starting, they fell off a cliff in 2024.
How much of a drop are we talking?
We're talking less than 10% of the levels seen in 2023. And just think, back in the peak, 2021, developers started over 1,300 units.
Wow, okay. So from 1,300 down to almost nothing in terms of new starts. Developers clearly hit the brakes.
They certainly seem to react to all the inventory coming online. Now, looking at deliveries leading into Q1 25, about 970 units were completed in the prior 12 months.
Still a lot of units finishing up then.
Exactly. But here's the kicker for Q1 itself. The report showed only 24 units actively under construction at that point.
24. That's tiny compared to the deliveries. A near standstill.
Precisely. You go from this massive building boom to basically just one small project underway.
So what does that setup mean for vacancies then? If demand is solid and construction stops?
You'd expect vacancies to start coming down, right? And that's what the trend suggests. The metro vacancy rate was 15.3% when the report came out.
Which is still high compared to normal.
Oh, definitely. The historical average is more like 6.4%. But importantly, that 15.3% was down from a peak of 16.3% in early 2023. So the direction in Q1 was downwards.
Okay, so a high but improving vacancy situation in the first quarter. Let's talk rents. Fewer vacancies usually means rents might start to climb.
Well, it's a bit more nuanced. Because of all those deliveries we mentioned, asking rents actually downshifted during 2023, and growth was pretty sluggish in 2024, too.
Too much supply kept a lid on prices.
Exactly. Landlords couldn't really push rents much. The market asking rent stated in the report was $15,590 a month.
And growth over the year prior.
Just 0.1%, tiny. Compare that to 2021 when annual rent growth hit 11.6%. Big difference.
Right, that supply wave really did its job in moderating rents. Now, let's zero in on Q1 2025 itself. Did the report give specific numbers for that quarter?
It did. In the current quarter section, which is our Q1 focus, the average asking rent was actually a bit higher, $1,652.
Higher than the overall average you just mentioned.
Yeah, slightly higher than the $590 figure, which was the market average at the time of the report, likely reflecting a rolling average. And the vacancy rate for Q1 specifically was put at 15.0%.
Okay, 15.0% vacancy and $1,652 asking rent in Q1. Still high vacancy, but maybe that rent figure hints at a little firming.
It could be a very early sign, yeah. With less new supply pressure, maybe some pricing power was just starting to return. The total number of units in the market was 9,580 then.
Got it. What about construction within Q1, deliveries or units under construction?
So the main key indicators table for the current quarter actually shows 0 units delivered and 0 under construction right in Q1.
0. But earlier you mentioned 24 units under construction overall.
Right, and this is a slight complexity in the reporting. That 24-unit figure comes from the year-to-date data in an appendix, which also showed 149 YTD deliveries.
Ah, so the YTD figures might capture stuff right at the beginning of the quarter, or maybe even spill over from late 2024.
Exactly. It lumps things together a bit more broadly than the strict current quarter table. It reinforces that slowdown, though. Essentially, Major deliveries were wrapping up, and almost nothing new was happening during those first 3 months. Oh, and zero demolitions in Q1 too?
Okay. And that one project listed as under construction of the Lucille. Anything specific there?
Yeah, the report lists it as 24 units, but the dates are odd. It says started July 2025, which is the future and completion, August 2024, which is the past.
With future start date, past completion date, that doesn't add up for Q1 2025.
Not at all. It strongly implies that despite being listed somewhere, it probably wasn't actually under construction during Q1. It further explains that near zero activity.
Okay, that makes sense. The data really paints a picture of construction hitting the pause button in Q1. What about the investment side? Sales activity.
Well, sales are usually a lagging indicator reflecting recent sentiment. Historically, Coeur d'Alene sees about maybe 4 multifamily deals closed per year.
And recently.
The report notes only 3 deals closed in the 12 months leading up to the report date. So a definite slowdown compared to the average and certainly compared to the peak year, which was 2016 with 9 deals.
Slow down there, too. What about pricing per unit?
Market pricing was around $124,354 per unit. That's down from the peak in 2022, which was closer to $142,000 per unit. So valuations had adjusted downwards a bit.
Any signs of that picking up?
The report speculates that if conviction around rent growth returning in 2025 strengthens, and given that yields might look attractive compared to, say, gateway markets, we could see more deals happening later in the year.
Interesting. And there was a note about the type of inventory changing, too.
Yeah, a subtle shift. The proportion of higher-end 4- and 5-star properties has increased. They now make up close to a third of the total inventory. So the market's maturing, getting more luxury options.
Let's quickly touch on the submarkets. The report breaks it down, right? Coeur d'Alene itself is the main one.
That by far. The Coeur d'Alene submarket holds the vast majority of the inventory, about 9,580 units in 160 buildings as of the report.
And that's where the main action was, the high absorption and the high vacancy.
Absolutely. It saw 1,467 units absorbed in the last 12 months, had that 15.3% vacancy rate. Those 24 units under construction were there, and it saw 969 deliveries in the past year.
And the other areas mentioned, Lata and Nez Perce. Much smaller.
Much smaller, yeah. Lata had about 1,500 units, much lower vacancy, around 5.2%, but basically no recent deliveries or construction. Nez Perce, even smaller, 700 units, very low vacancy at 1.2%, also no construction activity. Really highlights that the main story is in Coeur d'Alene proper.
Okay, good context. And all of this is happening against an economic backdrop, right? What's the environment?
Well, Coeur d'Alene has obviously shifted from its, logging and mining roots. It's a major tourist draw now, and the population's been growing steadily, around 185,000 residents in the metro area.
And Idaho overall has seen strong growth.
Yes, Idaho kept growing through 2024, largely driven by net migration, especially people coming in from places like California. The specific Coeur d'Alene metro growth figures for 24 weren't out yet in this April 25 report, but the trend was clearly upward population pressure.
Which fuels housing demand, but also costs.
Right. It puts upward pressure on the cost of living. And apartment rents specifically have seen a big jump over the last decade. The report mentions over 30%.
And that probably explains the building boom we saw leading up to 2024.
Almost certainly. Developers responded to that demand and rising rents. The inventory nearly doubled in the 5 years before this report, getting close to that 10,000 unit mark.
And who employs people there? What drives the local economy day to day?
Key sectors are government, leisure and hospitality, think tourism, and healthcare. Major employers include Kootenai Health, the Coeur d'Alene Resort, Bread Financial, and Hecla Mining still has a presence.
Okay, so wrapping this all up for Q1 2025, what's the key takeaway for you, the listener?
I'd say it's a market clearly in transition. It just absorbed this huge wave of new apartments.
Right, which led to that high vacancy rate we saw in Q1, although it's starting to tick down.
Exactly, and the most striking thing in Q1, that dramatic slowdown in new construction, almost a full stop.
Meanwhile, demand seemed pretty steady, absorbing units at a decent clip.
And rents were still pretty flat year over year, but maybe, just maybe, showing early signs of firming up within Q1 itself.
So Q1 2025 really feels like a pivot point, doesn't it? The market catching its breath after years of rapid building.
I think that's a great way to put it, a pivotal quarter following that supply surge.
So here's something to think about. Given that near halt in construction we saw clearly in Q1 and the steady demand, how long until that lack of new supply really starts to bite? Could we see vacancies drop much faster and rent growth accelerate significantly later in 2025 or into 2026?
That's the multi-million-dollar question, isn't it? How quickly does the balance shift back? It really depends on whether that demand holds strong and if developers stay on the sidelines. Definitely something to watch. And of course, if you want all the granular detail, the full report is out there.
Indeed. Well, that brings us to the end of this deep dive into Coeur d'Alene's multifamily market for Q1 2025. Thanks for joining us.